The Bay Area housing market is cooling off as we speak, but should Bay Area homebuyers be wary and stay on the sidelines for prices to drop even more? Coming up on this Silicon Valley Snapshot. It seems like every day now, I'm getting the question from one of our homebuyers here at the Selling Silicon Valley Group. Hey, Danny, should I wait? Should I not be making a home purchase right now with the rising interest rates and the talk of the recession? And gosh, my stock portfolio has come down a lot and I see more and more homes coming on the market. So what is that going to do to prices long term? Well, we're going to get into all of that and we're going to answer exactly whether or not you should be buying right now or if you should be waiting until the fall or the winter or maybe even until 2023. But before we get into all of that, if you're a home buyer in today's marketplace and you're looking for a comprehensive data set to assist you in your home buying decision making, you can text the word data plus property address, the zip code, the neighborhood, or the area that you're looking in, and we're going to send that information sent straight to your inbox. And if you're a home seller in today's market and you're trying to figure out, well, what should I price my property for? Gosh, what could I even expect to get in this market? Well, all of your questions will be answered when you text the word data plus your property address to the number down below. We're going to get all of that information sent straight to your inbox. The question on so many buyers' minds right now is, should I wait? I mean, let's face it, it's hard not to get negative with all of the negative news that's playing around the globe right now. Talks of a recession, talks of the stock market just imploding on itself, cryptocurrency, which is very relevant in our area, also taking a nosedive. What I've experienced now in talking to buyers every single day here in the entire Bay Area, the question that we're getting from so many of our buyers right now all over the San Francisco Bay Area. We're not just talking like Silicon Valley, San Jose and Cupertino and Santa Clara. We have buyers all over the Bay Area. We have buyers in San Mateo and Palo Alto and Menlo Park, as far north as San Francisco, all the way through Antioch, as far east as Stockton, Tracy, Mountain House, coming back down to Watsonville and Monterey and San Benito County, all the way through Gilroy. All of that. We have buyers all over the place here in the Bay Area, and we're getting the same question. Should I wait? And what I found is that there are four main concerns with buyers right now, four indicators that they're really focused on that's helping them either stay away or reassuring them that they should be entering the market at this time. And so we're going to go into those four things. The four indicators being interest rates, stocks, the number of homes on the market or inventory, and talks of the recession. And really what I found is that buyers who are waiting are looking for positive signs in one or more of those four indicators. So essentially want to see interest rates fall or the stock market rise or number of homes to increase, meaning like more homes for sale, or good news that the recession is finally over. They're looking at one or more of those key indicators, positive signs, signs of improvement in one or more of those key indicators. And so what I really want to do is go over those indicators right now and dissect the psychology behind those indicators and really understand what they mean for home buyers in today's marketplace right now. So first, let's talk interest rates. Right now, as we know, the Fed has just announced yesterday that interest rates have gone up another 0.75 of a point, which coincidentally means that mortgage rates fell. I know that sounds really weird, but mortgage rates are predicated on speculation of what's going to happen with the Fed's rates, and they actually increased less than they thought. So mortgage rates actually fell, believe it or not. So we were expecting rates to go up anywhere from 0.75 of a point to a whole point. Because we were on the lower end of the expected rate hike, we actually saw a decrease in mortgage rates. I know that sounds weird, but that's what happened. A lot of our buyers are actually waiting for rates to fall in order to make a home purchase. And really, if we think about it, if rates fall, what is that going to do to competition? Well, the further rates fall, the more competition there's going to be. And so right now we're in a situation where rates are climbing. And when rates are climbing, buyers fall out and out of the market. And so right now we are in a situation where you have, as a buyer, less competition than maybe you've ever had or you've had in a very, very long time. What happens when rates start to fall is more and more buyers are going to come into the market. And so sure, you might be paying a lower rate, but inevitably what happens with increased competition is that prices go up. And so whatever sort of win you're going to get from rates falling, you're going to make up for and probably more through the increased competition and the higher price that you're going to have to pay for that home. And to take it one step further, there is a high degree of certainty that interest rates will fall at some point in the future, making right now an amazing time to buy because the rates are so high and there is less competition. Is not everyone is thinking like you. Everyone's thinking, let's pull back and wait for rates to fall. But if you're like, hey, I'm going to lean in right now. If you're the smart buyer that's going to lean in right now when rates are high with decreased competition in 12 months, 24 months, 36 months, whenever the Fed lowers the rates and puts a stop to the increase in rates, that's essentially putting or curbing inflation, we're going to experience a big surge in refinances from this period. And so if you're one of the smart buyers that buys right now with an increased rate, you can lock in an amazing price with decreased competition and refinance into a lower rate later on down the line, which essentially means you double win. You lock in a great price and a great rate. Oh, by the way, did you know that you can actually negotiate for the seller to buy down your rate by 2%? Not a lot of buyers know about this hack. So if you're curious about learning more regarding this strategy, you can text the word rate buy down to the number down below. It's actually a really cool strategy that not many agents know about, but we know about it and we know how to educate you about it. Would love to talk to you a little bit more. So you can text the word rate buy down. We'll send you a lot of information when it comes to different types of rate buy down strategies. We talked about one in last week's video, but there's actually other rate buy down strategies where you can buy down the rate significantly by 2 percentage points or more if you use the strategies that we encourage you to use. So you can text the word, like I said, rate buy down to the number down below for a list of interest rate buy down strategies that you can utilize during your home purchase. Okay, so that's the first indicator, our interest rates. And if you can get on board with the fact that with increased interest rates comes decreased competition, and that means when everyone goes left, you go right, that's the best time to buy because there's less competition. If you can get on board with that, which, by the way, I mean, it makes perfect sense. And I'm putting my money where my mouth is. I'm actively looking for a property right now because I believe this is an amazing time to make an investment here. Well, anywhere, really, but especially here in the Bay Area, where prices are inevitably going to go up significantly once we get over this hurdle. Okay, so the second indicator are stocks. And this is one that obviously affects a lot of home buyers here in Silicon Valley because a lot of individuals here, a lot of home buyers are looking to cash in their stocks to buy a home, or at least for the down payment. A very common scenario right now that I'm getting is, hey, Danny, I would love to buy, but my stock portfolio has taken a 25% hit. And I just don't want to liquidate all of those stocks right now. It's such a heavy discount. And so I'm just going to wait for the stocks to come back up so that I can buy, which, I mean, sounds like a great idea in theory. Let's just wait for the stocks to rise. But let's talk about this a little bit more in depth. We should know that one of the best things about real estate, the best parts about real estate is leverage. And I'm going to give a very simple scenario here right now. So a buyer comes to me and says, hey, Danny, I don't want to sell my stocks at a 25% discount because honestly, I mean, I just can't get over the fact that my portfolio is down that much. And by the way, I totally understand. I mean, my portfolio looks like absolute trash compared to what it did a few months ago. But let's think about this for a second, because in a situation here, very common, a $2 million home purchase here in the Bay Area. What you would need for that, for a 20% down payment, is $400,000. So if you were to take $400,000 out of that stock portfolio, essentially that would have been about $533,000, maybe in March or February. It would have been $533,000, but now it's $400,000. So you're taking that out, and essentially what you're doing is you're taking a $133,000 hit on that money. Now you're going to invest it into some real estate, $2 million home. Perfect. Well, we all know that prices have come down fairly significantly over the last 3 months. And so you're already probably getting a fairly good deal, a fairly good discount on this house. But let's just say that in the amount of time that it takes the stocks to go up 25%, get back to that 533,000. Let's just say, play devil's advocate here, that the housing market only goes up 10%, which we know the housing market, stock market tend to go up fairly similarly. 10% is fairly conservative for a 25% increase or rebound in the stock market. But let's just say, for the purposes of this example, conservatively, a $200,000 or a 10% increase on that same property. So my portfolio, my $400,000 would have appreciated to $533,000 at a 25% increase. But what happens with the home? The home goes up only 10%. The home actually made you $200,000. Because of the leverage that real estate provides you, you're actually coming out net positive on this example. And by the way, this is why in most economic recessions, in most times when the stock market has come crashing down. This is why real estate tends to go up during those times, because in times of instability, investors go for something that's super stable and reliable, and that's real estate. Not to mention, because of the leverage, you can earn back that money way faster through real estate than you ever could by waiting on the stock market to come back up. And by the way, that is a very conservative example, because I would bet that the housing market rebounds a lot more than 10% in the same time that the stock market rebounds 25%. But I wanted to keep it super conservative so that you could see that even in like almost the worst case scenario, you're better off putting that money in housing than you are keeping it in the stock market. All right, so we covered the first two indicators, but what about the third indicator, which is housing or supply of housing? And that's something that a lot of buyers are focused on is, hey, I see more houses coming on the market, so I want to wait a few more months for more homes to come on the market because that probably means that prices are going to come down. And this is very true. Like conceptually, it makes sense. The more supply there is, the more choices there are. That means that there's going to be pressure on prices, downwards pressure on prices. This is absolutely true. That being said, if you look at how many homes sell year over year over year, the amount of inventory that sells year over year is fairly consistent. Just because there are more homes for sale doesn't necessarily mean that all of them are going to sell. It just means that there's more to choose from. So there's going to be more sellers who lose out and don't have an opportunity or end up deciding to not sell. It's very easy to forget that sellers actually can make a decision whether or not they want to sell their property for the price that you're offering. And that's one of the things here that I really want to drive home. One of the concepts that I really want to drive home is that in 6 months from now, when we normalize and we stabilize, sellers are no longer going to panic sell and be concerned with the fact that their home hasn't sold in 1 month or 2 months or 3 months. They're going to stay the course and either wait for the price that they want or not sell. This is common sense. Sellers right now are not being forced to sell. The bank isn't holding a gun to their head and saying, you must sell. And the truth is, most of them are sitting on 20, 30, 40% equity plus with no burning motivation to leave their home. Chances are they're not going to sell their homes at a significant discount. Now, here's what's happening right now in real time. As the market is adjusting and as we are readjusting to this new normal, this new market, sellers are panicking right now. You remember the first 60 days of COVID where everyone was panicking and no one knew what was going on and everyone was like going crazy over toilet paper? You remember the whole toilet paper frenzy fiasco? Well, that was only for like the first 30 to 60 days. And then like 6 months later, everyone was like laughing at the toilet paper people. You remember that? Well, that's exactly what's happening right now in this adjusting market. Is there are sellers who are panicking because their neighbor 3 months ago sold in 1 week. And now they've been on the market for 3 weeks and they're saying, oh my gosh, what's going on? I'm not selling. And in that moment of weakness, they sell their home for way less than they should. That is right now. In 6 months from now, where all of those sellers now have the data from right now, the data that's currently happening and seeing that the market has adjusted to a place where it's expected for the home to be on for a month or 2 months or 3 months. Once sellers have that information, they will no longer panic sell. And so this idea that we're going to wait for more and more inventory to come on the market, that's fine. But what we should really be focused on instead is finding opportunity in this market right now, because opportunity happens during the shift, not after it's already occurred. That's the message I want to drive home to you right now. If you're a buyer sitting at home and you're thinking, I'm going to wait for XYZ, think about it. Right now is when all the opportunity presents itself, not in 6 months. By then, everyone will be educated and well-informed and know what's going on. But right now, no one does, except for you, because you watch the Silicon Valley Snapshot. All right. So those are 3 of the indicators. And then finally, the last one is, hey, Danny, I'm just waiting for this recession to be over. I really don't feel comfortable buying in all of this uncertainty. This thinking is very similar to those who are waiting for rates to go down. Right now, in this period of economic uncertainty, there is a lot of opportunity because there are buyers who are scared and there are sellers who are ill-informed. And that is a great combination for someone like yourself that's well-informed, that understands that this is a temporary type of situation that you can seize massive opportunity in. But once the news that the recession is over hits and everyone feels more confident and secure, same thing as interest rates falling, more buyers are going to come into the marketplace at that time, which means your competition is going to go up. And we all know that competition drives price. And so while we all certainly would love to live in a world of absolute certainty, and news of an improving economy would certainly help assuage a lot of concerns, the truth is that most people feel the same way. And so if you're going to wait for that to happen, that's fine. But just understand that you're putting yourself at a significant disadvantage, and all of the opportunity that was there will disappear. I think if there's one message to take away from all of these indicators and really understanding how they fit into the equation of should I buy now or should I wait, is that opportunity, and in times of change, the time to take advantage of opportunity during times of change is as things are changing, not once they've already hit the rock bottom. Because once we know, like for example, once we know that prices have bottomed out, or once we know that rates have topped off or whatever, it's already too late, because you're already on the upswing. And so when you look at the bell curve of pricing, it's much better to buy on the way down than to buy on the way back up. Because when you're buying on the way back up, that's when you know you've hit the bottom, is when you're on the way back up. And so as we're going down, that's when we take advantage. That's when we lean in, because that's where all the opportunity is. During that time of uncertainty, that's when, as a buyer, it's most advantageous to make a purchase decision. And if you're a seller and you're watching this video, just know that this information is relevant to you too. You see, really the key takeaway here with analyzing all of these different indicators here and how it fits into your decision as to whether or not you should wait or you should buy, is the idea that right now there is a lot of uncertainty, but at the same time, there is a lot of clarity with how things are going to end. And so there's certainly a lot of things to question right now, but if you can understand what the vision is and understand that as things are in flux and as we're experiencing these times of uncertainty, that's when you as a buyer should be leaning in, because during times of uncertainty is where all the opportunity. That's the message that I want to drive home. And honestly, if you've made it this far in the video, first of all, thank you so much for watching. It means a lot. You've probably tuned in like 25 minutes it looks like, and counting. So thank you so much for watching the channel. It would really mean the world to me if you would click the subscribe button, hit the notification bell, and a thumbs up. It helps me get in front of more people like you, and it costs you absolutely nothing. So as a token of my appreciation for subscribing and liking this video, I will send you a free shirt if you text the word free shirt to the number down below. That's free shirt to the number down below. This is Danny Gould, everyone. I'm selling Silicon Valley, and I will catch all of you in the next video.